Hello! Hopefully your head isn't spinning. You came back for more. I hope you did. If you like these webinars, if you like our training videos, shoot me an email, Rebecca, R-E-B-E-C-C-A, @gordonmarketing.com. My partner, my sister, Sylvia and I, we run the company. We are a third-generation marketing company, and we thrive off your feedback. And if there are products that you want to learn more about, let us know, because obviously we love making videos. I'm hoping to win an award. I don't know if that'll ever happen. So give us feedback if you like them, if there's more stuff you want to see, and we will integrate that. Let's talk options. The first two videos, we talked a lot about the madness. We talked about some lingo. Now I want to talk about some options for your consumer. A customer really has three options with regard to how to prepare themselves or which plans to buy. So option number one, your customer can always go to the exchange, and remember, they're going to be calling it the marketplace because it translates. The only reason somebody would come into that is because they think that they will qualify for a tax subsidy, a tax credit. In the state of Indiana, it is projected that 70% of all Hoosiers will qualify for a tax subsidy. Just because someone will qualify doesn't mean that they're going to buy in this. So keep that in mind as well. Again, if you want to get a good feel for what projected prices will be, go to our website, check out my calculator subsidy. Those numbers obviously are not in stone, but they have come from very reliable sources as an excellent projection. So inside this, we're going to have 4 plans. I'm sure you've already heard of the metal plan. So we have bronze, and I'm going to abbreviate these. We're going to have silver, we're going to have gold, and we're going to have platinum. Inside the exchange, go ahead and think of this as like a Medicare supplement plan. They're going to be standard. All right, so you know, in the Med Sup arena, Plan F with Mutual of Omaha is going to be the same F as it is with American Heritage or whatever else carrier is out there. This one's going to cover 60%, this one's going to cover 70, 80, and 90%. What does that mean? That means that at the end of the year, the company has to have covered 60% of all claims in that bronze block. 70%, 80, and on up. Big question is, what if they don't? I don't know. I am thinking, in what I've heard, that if a carrier falls short, that they can be penalized. Maybe they have to send a rebate back to consumers. We're not sure. Again, there's so much confusion. There's so many we don't know yet, that a good rule of thumb is once I know it, you'll know it. So we suspect that these two plans will be by far the most popular. These plans are going to totally be priced out. $6,250 for an individual and around $12,000. I hope you can see this for a family. So right now with these plans, there's an out-of-pocket maximum. So for an individual now, with these new reform plans, the most out-of-pocket a consumer, worst case scenario, they're on the hook for is $6,250, roughly $12,000 for a family. What does that mean? If you consider major medical kind of a scale, right? And this is how I would always explain it at some of my courses or when I was out selling. If it's a scale and I raise my deductible, right, what happens to my price? My price goes down. If my consumer says, you know what, that deductible's too scary, and I drop that deductible, what happens to my price? My price goes up. So if my max out of pocket is $6,250, all right, so take me, I'm almost 42. Maybe my deductible's $1,000. Maybe my coinsurance is a 60-40 to, we'll say a $5,000 out of pocket. So let's say those two together are $6,000. And then maybe I have $250 in built-in copays. That's it. You can just think what type of a price that would generate, because a $1,000 deductible in today's market is nothing. If you are successfully selling major medical, you're selling $3,500, you're selling $5,000, you're selling $10,000 deductibles. Majority of those deductibles are gone. So if somebody is going to buy in here, and also keep in mind, who's buying in this market, right? Good chance it's going to be the folks who don't have a lot of money and have a lot of health conditions. So the question is this, are you selling them now? Probably not. You're probably selling, your consumers is our private plans, which is business as usual, which is your Assurant Health, your Golden Rules, your WellPoint, your Anthems. Those carriers will be playing in this market space. I think what you're going to find out is a lot of those carriers might not be playing in this space. Maybe a little teeny bit, but not having a big presence. Again, you have your 4 metal plans. So we're going to have bronze, silver, gold, and platinum. I think your bronze and silver will be by far your biggest. So that's going to be standard. Your out-of-pocket maxes, that's standard. All these plans will have essential health benefits. That's standard. They're all guaranteed issue. That's standard. So in this marketplace, it's going to come down to price, and it'll come down to comp. We don't know what commissions are yet with reform business. Right now, business as usual. I said in those other videos that I have a carrier that's guaranteeing rates until December 2014. So all that business you write now, you're getting the same street pre-reform commission, all right, that you would be getting on regular policies. Do I think there will be a place for agents? Absolutely. Do we know? We don't know yet. I've been to some meetings where carriers have asked, would it be more beneficial to pay agents a flat fee, kind of like the Medicare Advantage arena, or a percentage? We're not sure. Again, as soon as we know, you will know. This is my livelihood as well as it's yours. I love this market. But this is an option. These are going to be your self-employed folks. This is also going to be a lot of your small groups. And if you're looking for opportunities in this marketplace, look to your small groups. One of the biggest reasons that people have continued to write small group is because it's guaranteed issue, right? You got a group of 5. The employer is a diabetic. Well, you can't write individual policies on them, right? Because the diabetic is a flat-out decline unless you write a group. Now that the individual arena is guaranteed issue, now is the time you go to your employers, you say, look, we're taking the handcuffs off you, right? You still want to offer a product, a benefit, a perk to your employees to keep them, to attract them, but now we can look at it differently. Because we can look at this option, we can look at this option, and then we can look at option 3, which I'll cover in a minute. So under 2, I want you to write self-employed, and I want you to write small groups, 2 to 50. Magic number, 2 to 50. Option 3, this could be no insurance. Your consumer says, I don't want it, I'm not going to do it. The government's not going to tell me what to do. Whatever, right? Okay, so don't take it. If you choose to not buy insurance, what's going to happen? You're going to get a penalty. If you jump on my website under the reform page, you'll see an outline of these penalties. For this year, your penalty is 1% of your annual income or $95, whichever is greater. Whichever is greater. Again, who is the person who's going to go without insurance? It's not going to be me. It's not going to be a self-employed woman who has 4 kids, who runs a business. Wouldn't dream of it. No possible way would I ever put my financial future in jeopardy. It's going to be the people who don't have coverage now. And they don't have coverage now because it's too darn expensive. What's our option here? A scheduled benefit plan would be a great bridge. Now look, I'm going to hold you off on that. I want you to tune back in for my other video to talk more about this plan. So go find video number 4. You can go to our channel, Gordon Marketing, and you're going to see a lot of videos on there. You're going to see training classes in the senior market, Med Sup, Med Advantage, Part Ds, life, annuities. We love this business, folks. We hope that it shows. Tune back in.